Nischal Maheshwari as well connecting with us. Nischal, good morning. Let's get in your take first up then. Maybe on Reliance Industries, pretty much in line with what the street was expecting. How have you read into the numbers? Was there an anticipation that there would be some further announcement?
Morning, I agree with you. I think more or less in line with the results. Basically, what I'm excited about between the three of the businesses, I think, is retail. Retail has done very well. And I think one of the interesting things which they have put out is now they have three in-house brands which have crossed 2,000 crores of revenue. So I think retail is the highlight of this current quarter. Profitability wise, I think more or less in line. The second thing which was highlighted is that the capex seems to be now going on the downside. So their net debt has gone up. Has gone down. So they are spending less. So I think these were two worries basically, which this was one of the worries which people had about Reliance. Capex is going to continue to go up. So I think this current quarter is showing some signs of improvement there. So overall, good set of numbers. We have a buy on Reliance. We continue to maintain the buy.
What are you telling your clients, Nischal, at the current juncture? Take chips off the table or ride at least till the election verdict?
So totally agree with you. I think Nikunj, morning. I think it's a good time actually to take away some money from the table. If you really look at it, basically what can go right for India is everything is right now there and it is sort of priced in. Even for election side, basically, I think market is discounting 370 to 400 number for NDA. So I think that's the best they will be able to achieve. And if it happens also, I don't think so market will go up. But if there is any negative, so I'm saying the problem at the moment, what I see here is that there is no room for any mistake. So any results happening or today what we've seen happening in Mahindra and Mahindra, and you'll see market reacting very negatively. You saw basically for I also any negative news, market just dumps the stock. So you are priced to perfection at the moment. So any mistake anywhere basically is going to have a very strong reaction. So I think this is a good time to take some money off the table, maybe 5-10% basically of your portfolio and keep in cash. Wait for things to maybe come off, or I think some time off basically, and then re-enter the market.
I used to think the same, that okay, this market is to perfection. So I was not surprised with the sell-off Nischal what happened in the month of March. But what amazes me is that FIs are selling and yet markets have recovered. And the small cap index is only 1% from its all-time high. So while we may talk about valuations, the market is telling you a different picture.
So I think basically flows are very important at the moment, and we are seeing very strong flows ahead. But once I think for 3-6 month market just goes sideways and people do not see the same amount of returns what they got last year, I think then I think those will slow down. And if the FI selling continues, you will see some sell-off in the market. If you really look at it, I think there are two or three things which we had put out in our last strategy saying that what can go wrong in the market. Already two have played out. One was basically we were very circumspect of the inflation in the US because everything in the was still rising. And that has continued to do so basically. So at the beginning of the year, we were talking about 6 rate cuts. Now we come down to, I believe basically it might not happen anything. Nothing will happen in this current year. So higher for longer, we have to see basically how it all pans out, whether the demand in the US itself is going to go down. And if that happens, I think there will be impact across the world. Secondly, basically our second view was that this something in the Middle East is going to flare up. So geopolitical situation, that also happened. Market has discounted it at the moment, but I think we are sitting on a keg of gunpowder in the Middle East. Anything goes up, basically things can go really down. So I'm saying you are priced to everything what can go right for the world, for the market, for India, I think is already there, and it sort of seems to be priced in. So I think one should be at this moment, yes, can go, nothing will happen. I agree with you in the next 6 months. but market may not go anywhere from here also. So it is good basically. Take away some 10-15% because everybody has got a lot of profit on the book. So take away some money, sit, see if there's any correction, nothing happens, 6 months later, come back into the market.
Nuresh,
Just curious to get in your take. There have been a few IPOs that have been hitting the market. Has there been anything interesting by way of listings recently or anything that's upcoming that's caught your eye?
So I think yesterday's closure of Voda was really a very good surprise, actually. I think the institutional side got subscribed 20 times. I think that shows that a lot of confidence after what all we have gone through in the last 5 years for Voda. So I think this is one which was a surprising and a good FPO. So that is the one basically which has really caught my eye. I think that really sets the ball rolling for Voda at least.
what happened to your mind? Let's assume that the cash comes into the balance sheet. Logically, how it works now?
This question is for me, Nitin?
That's right, Nischal. I'm just trying to connect the dots here. They have a
Yeah.
debt, they get cash, they start doing a capex. So, what's the end result for a shareholder here?
So two things I think if positives are supposed to happen, basically, let's look and try and see what is the blue sky scenario for Voda. I think there is two things. One is basically they stop losing subscribers. I think that should be the first aim of the man to stop losing subscribers. Every month, if I'm right, basically they lose, I think, 3 to 4 million customers. If they can bring it down to zero or customers, that is one important thing. Second thing, as they start investing into the network, people would upgrade basically from 2G to 4G and 5G. They have a good network of 4G at least in 17 cities. Their 2G subscriber base is the highest. 50% of the subscribers is 2G. So I think that will improve their ARPUs. So there is one rate hike which the whole sector is expecting post the election. And I believe basically this subscriber losses going down and transition from 2G to 4G will increase their ARPUs. So our estimates say that basically their ARPUs may see up to 200 rupees from 148 today into FY26. So that could be a big jump basically for this thing. EBITDA levels, basically they do something like 21,000 kind of a number basically. We believe basically by 26, the EBITDA should be at least 25 to 26,000 crores. If you really look at the debt side on the book, it's 2 lakh, I think 31,000 crores, but the majority, except for the 6,000 crores debt basically which they own to the banks, all remaining is to the government, and government is the largest owner in the company. So that way, if government converts this into equity at some point of time, I think it will be a major winner for the government. This stock will get hugely re-rated, and it is a win for everybody. If government converts it at a price and then waits for a year or two, I think it will be a win-win for the government, the company, government's long-term view also say that we should have 3 subscribers or 3 players in the market, and I think and good stock for the investors.
So, if that is true, then one should buy even today at 13 rupees because, okay, the issue must have come at 11, but if you think that the blue sky scenario will work out, then it could go to 20, 25, 30 also. Then buy at 13 rupees also, Nischal.
So yes, I think blue skies, Nikunj, that is a blue sky which I have drawn up. But look at even 13, yes, definitely. I do agree to you that a 13 going to a 20, 25 in next 2 years. So I'm saying doubling from here in the next 2 years. I don't think so that would be a much of a very big ask if all things start happening as I've described it.
Oh, let's get in a sense as to whether if we had to sort of nail it down to some top recommendations within the broader markets. Which sectors or themes or stocks do you think would fit the bill?
I think banking seems to be in a good space, basically, especially the large cap banks. We look at HDFC result, I think a good set of numbers. They are sticking to their core. They are not compromising the profitability. I think they are doing reasonably well as far as growth is concerned. So I think within the large cap space, an HDFC Bank, TCS results are good. So I think these are some of the, I'm saying large caps is what my preference is at the moment, because you are comfortable as far as valuations are concerned. And some of the stocks which have not done really well, I think those are the stocks to be looked at.
All right. Thanks very much, Nischal, for joining in and sharing with us that outlook on the markets. Let's also take you through some of the other top stories. And
if you like this video, then like, share and subscribe to ET Now.